Hey traders, Jeff coming to you here on Monday, March 17th. Happy St. Patrick's Day. I want to take a few minutes here as we begin this little bit of a bounce in the market in here. I think it's important that we understand kind of where we are, especially with the fact that FOMC is coming on Wednesday. So I think I'm going to just kind of walk you through. This is a time because of the steep retracement here. The bounce is a little bit unpredictable in here. Now, this can be all thrown aside when you think about Wednesday and FOMC in the afternoon. But at least until that point in time, it's critical we look at these areas of where this bounce could do. We don't want to falter in these areas. Otherwise, we could come back down and do the double bottom here prior to. So take a second. We're going to take just a minute and review our current bias on where the market is. Hang tight. All righty here. This is a picture of the SPY. Before I get to that, let me actually bring I like to look at this at least on a daily basis when I get into the sectors. What's interesting today is that with the market that rallied so high here, probably midday forward, the consumer defense went with it and actually led the way. Now that's a little different, right? Typically defense products or defense stocks typically counter the market in a lot of ways. So the bounce happened, it all bounced in here. What wasn't leading the way was communication, but interesting that consumer defense just barely kind of shaved out energy on the top here. We had some housing numbers here at 10 o'clock, so the real estate also fired up back in here. And of course, healthcare has been doing nice here. But interesting that I thought that actually came about. Now, let's take a look at the SPY here and the spiders. This is the move down we've been talking about in here. A couple of things I want you to really focus on. Number one, look at the fib levels in here. Well, two things. I want you to look at the trend line in here. Okay, I'll do this a little bit darker. You can see it. That's the primary. I could draw kind of a secondary in here to show. Why don't I do that? Because I want to show you both in the sense of what could transpire as a result of this. So that would be the primary. Your secondary typically runs in here. And I kind of construe secondary as just kind of a heck up higher that extends out the trend line. And then the real one after that is kind of the downshake in this type of a market. So you can see we came up, we double bottom, we came up on Friday. And today, it looked like we weren't going to go much. If you look at the intraday chart in here, we were sitting in here almost flagging in here a little bit more. If you want to call it a bullish consolidation, I actually wrote that off. I didn't think that was going to be bullish. I thought it was going to be more of a kind of a retest and failure, kind of stay within an open range here. But something happened here about 1 o'clock. Actually, something happened really big at 2 o'clock. That ignited the market under $2.50. But right in here is when it started to make that move. So obviously the market kind of got it in gear, had this bullish pullback, some whittling of the positions. But more importantly, let's take a look at where we are in the bigger time frame. So this is the secondary. Now, normally what happens is you have this double bottom. It happened pretty quickly here. I would not be surprised if we touch again to the trend line or 200 and move back down again for yet another top at the bottom. Now, that may be all for not this week because we do have FOMC coming on Wednesday. The things I want to point out to you from the top to the bottom are the fib lines. These are probably as accurate as you can get when you start looking at retracement levels or pullback levels. So I drew the line at 21.6 is right here. You can see we kind of went up and through that. Also pay attention to where the dotted line here, that's the 8 exponential moving average. I thought it would hold in there a little bit more because the angle of this drop was going to be a little more stymied the move, but they got behind it. Must have been some news out. I haven't looked at the timing on the news yet. Maybe something came from the White House, but 30.8.2 on the second fib line right in here. You can see, and where is that converging? We got a trend line coming in there. We have the flat 200 or just the slightly elevated 200 period movement at SMA here and the fib line converging here. So we likely could have one more update, probably about $3 or $4 more than the high today. And where it pulled back, probably about $5 higher. I wouldn't can't bet that out just yet. You'll have to pay a close attention to it tomorrow. But again, I think you still have a little bit more upside potential in here. Whether we do or we don't, it could be based on overnight news, the gaps, and whatever comes out from politically. Could it change the trajectory earlier? Maybe we gap down. Maybe we don't have this road. But if we don't and nothing new comes out, we could simply flourish right up into the 200. Again, I'm going to put that on the bank. That's 572.74. So we'll call that 573. I think that's where the potential is tomorrow, heading into Wednesday's FOMC meeting. So I'll give it that. We'll see how we actually shake out tomorrow. Another great day of trading in here. We actually held back a lot on the room today. We did take in a call spread later in the day here that thought we were going to kind of bounce off that 8, but we went up a lot higher. So we had to get a stop out of there. But a lot of the things that were going that we didn't get the pullbacks, like C and things like that, are really going. Our American Express credit spread, bull put is doing fine. The SOUN's fine. We have a few others in there. So far, so good. So we'll see how tomorrow kind of bakes the new prices in. You guys have a great rest of the day. We'll talk to you tomorrow.